You're listening to Seven Horns AI, your AI-powered market update. Good evening, on this Thursday, June 11th, looking back at Wednesday's trading session. Stocks sold off broadly on Wednesday, with the Nasdaq leading the decline as AI-related names faced another wave of selling pressure. The market opened with a brief, modest gain, but that early strength evaporated quickly, and the selling accelerated into the afternoon. All three major indices closed at or near session lows. The S&P 500 finished down 1.61%, closing at 7,267.65. The Dow Jones Industrial Average declined 1.87%, settling near 49,900. The Nasdaq Composite saw the steepest drop, falling 1.98% to roughly 25,200. This marks the S&P 500's first back-to-back decline in 3 weeks, pulling the index back to early May levels. Intraday, the S&P 500 was already down about 1% by midday, with the decline steadily deepening through the afternoon and no meaningful recovery. After a rough cash session, futures are showing modest stabilization. S&P 500 futures are up 0.27%. Nasdaq 100 futures are showing a bigger bounce, up 0.45%, and Dow futures are up 0.18%. Futures are clawing back a small fraction of the day's losses, suggesting selling pressure has paused for now. The AI trade continued its unraveling, with Supermicrocomputer plunging 28% to $29.27 after announcing a $7 billion equity and equity-linked financing plan, heavily diluting existing shareholders. It continued to bleed in after hours, down another 1.9%. Nvidia fell 3.73%, and Broadcom tumbled 5.1%. Apple was the only megacap in the green, gaining 0.35%, showing remarkable relative strength. Tesla, however, was among the biggest megacap decliners, down 3.80%. Beyond the megacaps, Navitas Semiconductor fell sharply by 10.28%, reflecting broader semiconductor pain. Meanwhile, in a counterintuitive move, gold tumbled 4.15%, an unusually large decline for a safe haven asset on a risk-off day. With Wall Street pulling back meaningfully on Wednesday, Asian markets are currently navigating a challenging live session. The Nikkei, in its previous trading day, closed lower by nearly 2%, and the Hang Seng saw a decline of over 1%. However, as we look to the current overnight session, Hang Seng futures have edged up slightly to around 24,307 from their day session close, suggesting a small recovery. This, coupled with the modest stabilization we're seeing in U.S. futures after the bell, indicates that while today's U.S. selling is a clear headwind, there might be some underlying resilience preventing a full extension of the deepest losses into the current Asian trading hours. The day's sell-off was driven by a trifecta of AI fatigue, persistent inflation anxieties, and geopolitical flare-ups. The May Consumer Price Index report remained front and center, with U.S. headline inflation at 4.2% and core inflation up 0.2% month on month. Adding to concerns, Japanese wholesale inflation hit a 3-year high of 6.3%. Geopolitical tensions between the U.S. and Iran drove crude oil sharply higher, jumping over 4% to $91.81 a barrel, with the United States oil ETF surging 2.28%. The VIX, a measure of market volatility, closed up 5% at 19.87, indicating elevated but not panicked sentiment. Looking ahead, keep an eye on earnings from Adobe today, and anticipation is building for SpaceX's initial public offering on Friday, June 12th. That's your market wrap for today. This has been a Seven Horns AI production. For more insights, visit us at sevenhorns.ai. We'll be back tomorrow.